Saw this question recently. If I gift $50,000 to my daughter to help with a down payment, do I have to pay gift taxes on that? Ooh, gift tax laws are confusing. I've got that and more coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. Gift tax laws are confusing, guys. They are. I wish it was straightforward, right? But it is not. And yeah, right now with housing affordability really being stretched, right? It's not so much that, well, my estate is so big that I'm going to have to pay inheritance taxes or federal estate taxes. Well, those are still out there. They've raised the bar so high that, you need to have an estate over $13 million. And if you're married, double that before estate tax issues. So there's not as much gifting occurring for most people because of estate tax reasons or inheritance tax reasons. But it's actually gifting to help the younger generations manage and bear up under some of these higher costs of living these days. So I saw this question recently and thought it would be a great one to tackle here. And that is, I'd like to gift $50,000 to my daughter and her husband so that they can buy a house. Interest rates have come down a little bit. They think now is the time. And I want to help them with the down payment. If I gift them $50,000 for their down payment, will I have to pay gift taxes on that? Well, there's a couple of different types of taxes, okay? So let's split them apart, and we'll start with gift taxes in particular, okay? Gift taxes in particular. Well, good news is, in this scenario, it gave just enough details for me to be able to answer that likely there will not be gift taxes in this scenario, thanks to something called the annual gift tax exclusion, and gift splitting. Okay, so what does that mean? Each year, the IRS posts, this is how much one person can give to someone else and not need to report it. There's no gift taxes. You don't even need to report it. And that for 2024 is $18,000. I don't even want to tell you where it started, where it was when I started my career. A lot lower than that, but it's $18,000 one person can give someone else in a calendar year and not need to report it. So in addition to that, though, there's this allowance to do gift splitting. So if you can give $18,000 to your daughter, you can also give $18,000 to your daughter's husband. Okay, so there we go. That's $36,000. Gets us closer to that $50,000, but we're not quite there yet. But if you can do that, your spouse can do that too. So your spouse can give another $18,000 to your daughter, and your spouse can give another $18,000 to your son-in-law, to your daughter's husband. And now we've cleared that $50,000 threshold. Therefore, due to the annual gift tax exclusion and gift splitting, yes, you can give the $50,000 in this question, this scenario, to your daughter for the down payment of their home, and there'd be no gift tax to worry about. Because you went above because you gave more than $18,000, your household, you will need to file a gift tax return. But there won't be any gift tax due, and it won't even eat into your lifetime gift limits because you still gave, below or at that $18,000 annual gift tax exclusion. But because you're doing gift splitting, still a good practice, you should file a gift tax return. But no gift taxes would be due in that scenario. Income taxes, though, those are different than gift taxes. And a lot of people misapply these rules. They think, no, I don't owe any tax when I give below that annual gift tax exclusion, so I'm good. So they think I can give someone, 15 grand out of my IRA. Or they think, well, I'm allowed to give to charities and that's a deduction, and therefore I'm allowed to give to my kids and that's a deduction as well. It's not. So income taxes, that's separate from gift taxes, okay? You might owe income taxes on the $50,000 gift. It just depends where the $50,000 came from, okay? If you had $50,000 sitting in cash and just earning a little bit of interest and use that cash to give to your daughter and son-in-law, then no issue. But if that $50,000 was in your IRA and you have to take it out of your IRA before you can give it to your daughter, yes, that's going to be taxable to you. Anytime you withdraw money from your IRA is taxable, right? And any pre-tax dollars from your IRA, I should say. You could draw it out of your Roth IRA. You might not want to do so. Typically, those are the last dollars you should touch. But drawing dollars outside of your Roth IRA, as long as you've met the 5-year rule and are age 59 and a half, no tax on that. But if you got the $50,000 out of an IRA or a tax shelter, there may be income tax for you. Or if this $50,000 was invested, and maybe it was invested in some investments that have appreciated in value, and you sold those investments in order to give this cash to your daughter, then you'd have to report that gain on your taxes. So the gift in and of itself is not taxable, but depending on how you came up with the money, there could be some income taxes. Now, a couple deeper points. There isn't a way to give money from your IRA directly to your daughter or to a family member. That would actually be nice. It would further complicate the tax code, and gosh, they have this thing looks like Frankenstein's monster. I mean, they have created a lot of confusion even in the past few years with Secure Act 1.0, Secure Act 2.0, all the CARES Act, and some of these others. So it's a mess, okay? But they could do that in the future, but not right now. You cannot gift money from your IRA directly to someone else's IRA. So that's not possible. But if you owned investments outside of an IRA, say just an individual account, a joint account, and like I said, well, if you sell it, you're going to have to pay the tax on it. You could actually just gift those investments to your daughter. But when then she and her husband go to sell those investments, she would need to recognize the capital gain. You can't gift, say you bought an investment, we'll do really easy math. You invested 40 grand into the S&P 500 index. It's now worth 50 grand. If you sold it, you'd have to pay capital gains on that $10,000, on that amount of gain. If you held it for more than a year, that'd be long-term capital gains. If it was less than a year, then it'd be ordinary income tax rates. If you gift that investment to your daughter, you gift your cost basis as well. Even though she received the market value of the S&P 500 at $50,000, she still would have to pay tax between whatever your basis was, $40,000 in this example, and whatever she sold it at. But that would be a way for you to gift her the resources and have you not be subject to the income taxes on it. So that's a little bit about how the annual gift tax exclusion works and how gift splitting works. This is going to be more and more of an issue. I don't expect that housing affordability will much improve, especially as interest rates get lower. We'll see what happens with the economy and GDP and housing supply, right? So we'll see. But then also with the great wealth transfer over the next 20 years or so, the significant amount of wealth that will be transferring from one generation to another, I hear it time and again from folks that say, well, I don't want my kids to just inherit this money when I pass away. I want it to help them right now. They need it right now. They're raising kids and starting families, all that sort of stuff. And houses are unaffordable and so on. I want to see them receive like a tangible benefit from these dollars. And therefore, the leveraging or understanding the rules of this annual gift tax exclusion, annual gift exclusion, I think will be more and more prevalent. So work with your certified financial planner on that. If you don't have a CFP on your team, you can contact one of my team. Find us online, Korhorn.com. That's Korhorn with K, wisemoneyshow.com. You can find us there as well, or send us an email, info@korhorn.com. All right, there you have it. Go out and take your next wise step in your financial life.